Alright, let's get right into it. If you've been paying even a little bit of attention to the financial world lately, you've probably seen the headlines. The cryptocurrency market has been on an absolute roller coaster, and as of today, September 7th, 2025, things are getting incredibly interesting. We've seen a lot of sideways movement, which for many new investors can feel a bit boring or even concerning. Is the big run over? Did we miss the boat? Let's talk about the Bitcoin halving because this is the most important concept you need to understand. I'll make it super simple. Imagine a magical gold mine. It produces a fixed number of gold bars every 10 minutes. Every 4 years the machine is reprogrammed to spit out half as many bars as before. New gold entering the world is cut in half. If demand stays the same or increases, the price per bar goes up. That's exactly what the Bitcoin halving is. Instead of gold bars, it's new Bitcoin. Miners are the people running powerful computers to verify transactions. As a reward, they get brand new Bitcoin. That's how new coins enter circulation. The halving is written into Bitcoin's core code, and it cuts the miner reward roughly every 4 years. The most recent halving was April 2024. Before, miners got 6.25 BTC per block. After, 3.125 BTC per block. New Bitcoin supply hitting the market dropped instantly. Why does this matter for your wallet? Bitcoin has a fixed total supply, 21 million coins. There will never be more than that. Unlike the US dollar, which can be printed by central banks, Bitcoin is designed to be scarce. The halving enforces that scarcity automatically. It makes Bitcoin disinflationary, meaning the rate of new coin creation slows over time. That predictable supply reduction drives value. When new supply is choked off while demand grows, the price tends to go up. That's what people mean by Bitcoin cycles. The 4-year period between halvings sets the market rhythm. And right now, we're in the post-halving accumulation phase. So, the halving happened in April 2024. The big question is, what happens next? We don't have a crystal ball, we have historical data. Bitcoin has had 3 previous halvings: November 2012, July 2016, May 2020. Each time a remarkably similar pattern played out. Almost boring, which is good for investors. The pattern: price grinds sideways, then slowly drifts up, lulling everyone, then the fireworks. After November 2012, quiet for months, slow climb, massive surge, peaking about 12 months later in late 2013. Fast forward to July 2016, quiet months, sideways action, slow, steady grind up, peak about 17 months later, in December 2017. The bull run most people remember. It was everywhere in the news. Everyone's cousin was suddenly a crypto expert. Then the third halving in May 2020. You can probably guess what happened. The world was in a weird place with the pandemic, but Bitcoin's code didn't care. It did its thing. The mining reward was cut. After months of consolidation and accumulation through summer 2020, the price began its epic ascent. The market top arrived about 18 months after the halving, in November 2021. Do you see the pattern? The halving acts as the starting gun, but the race doesn't really get going for a few months. Peaks tend to arrive between 12 months and 18 months. Of course, past performance is not an indicator of future results. This time could be different. But underlying supply and demand mechanics are unchanged. The supply of new Bitcoin was cut in half and demand is arguably higher than ever. Okay, let's get to the part you've been waiting for. Based on this historical data, when can we expect Bitcoin to reach its peak price for this cycle? If we stick to the pattern, we can create a pretty clear timeline. The halving was in April 2024. If we look at the previous cycles, the market top arrived between 12 months after the halving event and 18 months after the halving event. So, let's do some simple math. Adding 12 months to April 2024 brings us to April 2025. Adding 18 months brings us to October 2025. This gives us a target window for the next major market top, somewhere between April and October of next year, 2025. As of today, September 7th, 2025, we are sitting right in the middle of this projected window. This is what makes the current market so incredibly exciting and, let's be honest, a little bit nerve-wracking. We are about 17 months past the halving. If this cycle follows the 2017 timeline, the peak could be happening right around now. If it follows the 2021 timeline, it could be just a month away, 2 months away. Several well-respected analysts in the space have been pointing to the third quarter and fourth quarter of 2025 as the most likely period. This aligns perfectly with what the historical data is telling us. Now, some experts believe this cycle might be a bit different. a concept known as the lengthening cycles theory. This is where things get really fun. Predicting the exact price of any asset is impossible. Anyone who tells you they know for sure is trying to sell you something. We can use data and models from previous cycles to make an educated guess. Look at diminishing returns between cycles. Each cycle hits a new all-time high, but percentage increases get smaller. Bigger asset equals more money needed to move price. Let's look at the numbers. 2013, about 500x from previous peak. 2017 peak approximately $20,000. That's approximately 17x from 2013. 2021 peak approximately $69,000. That's approximately 3.5x from 2017. Pattern, returns are diminishing. Apply a smaller multiplier to $69,000. Reasonable multiplier, 2x to 3x. Be conservative, use that range. 69,000 times 2 equals $138,000. 69,000 times 3 equals $207,000. Target range, $138,000 to $207,000 per BTC. Many analysts give similar numbers. Consensus often approximately $150,000 to $180,000. Now let's combine our two key predictions, the date and the price. Target peak window, now through the end of 2025. Target price range, $138,000 to $207,000. This gives us a concrete scenario to work with. The most likely outcome? Bitcoin experiences major appreciation over the next 1 to 3 months, culminating in a new all-time high within our predicted range. This is the thesis many smart investors are operating on right now. They are watching for signs that this final parabolic phase is beginning. What are those signs? First, a decisive break of the previous all-time high. Once Bitcoin surpasses $69,000 and stays above it, it enters price discovery. There's no historical resistance above that point. Price can move very quickly. Second, an explosion in retail interest. Your friends and family who called you crazy will suddenly be asking how to buy Bitcoin. Third, Bitcoin dominance starts to fall as money flows into smaller, riskier altcoins. Let's use the last cycle as a perfect example. Bitcoin broke its 2017 high of $20,000 in December 2020. Over the next 11 months, it rocketed up to $69,000. During the final few months, we saw extreme euphoria. That widespread, irrational excitement is a massive red flag that the cycle peak is near. When making money in crypto starts to feel way too easy, it's usually time to be cautious and take profits off the table. So what should you do with all this information? Let's wrap this up with a simple, actionable game plan. First and foremost, you need to have an exit strategy. I can't stress this enough. It's easy to buy crypto, but it's incredibly hard to sell. Especially when prices are soaring and everyone is telling you it's going to $1 million tomorrow. Decide now what your price targets are. Maybe sell 25% of your Bitcoin at $140,000. Sell another 25% at $160,000, and set further targets, and so on. This is called dollar cost averaging out. It's a smart way to take profits without trying to perfectly time the top. Write your plan down and stick to it. Second, pay attention to market sentiment. Use the Crypto Fear and Greed Index, free online. It measures market emotion. If the index shows extreme greed for a long stretch, the market may be overheated. Also, keep an eye on mainstream news. When Bitcoin is the lead story on CNN and your Uber driver is giving you crypto tips, the top is probably close. Finally, only invest what you are truly willing to lose. Never invest your emergency fund, rent money, or capital you might need short-term.